Hello traders, welcome back to ComLucro. Today, we're bringing you something truly special. We went on a mission to find the most valuable interviews with professional traders, those who have genuinely built their success through trading. And no, we're not talking about social media influencers who claim they bought a mansion last week by trading stocks on their phone during a 5-minute coffee break. We're talking about real, accomplished traders who've earned millions, even hundreds of millions, by honing their skills in the market. At ComLucro, we're passionate about learning from the best to help you level up your trading game. So, we dug through countless interviews, handpicking the moments packed with actionable insights and advice that can make a real difference in your own trading. And let's be real, it took some work. These interviews were hours long, so we condensed the best parts to bring you maximum value in the shortest time possible. Quick hint, there are some true gems ahead. Now, while we're thrilled to share these highlights with you, we also believe knowledge is limitless. We recommend checking out the full interviews whenever you can, because in trading, there's no such thing as knowing too much. Please be sure to explore other videos in this series and visit our website for more resources. After this important message, we'll get right into it. Stay tuned, you won't want to miss it.
Hey traders, if you're looking to level up your trading game, give this video a thumbs up, subscribe to the channel, and hit that notification bell so you never miss an update. Before we dive in, we highly recommend checking out our playlists on trading psychology and risk management. These videos can significantly help you manage emotions, maintain discipline, and develop effective risk management strategies. Key elements for achieving profitability in trading. Please listen, and remember, no amount of study to find the perfect trading strategy will benefit you if you lack emotional control during your trades. If you cannot accept a losing trade and keep moving your stop loss, or worse, trade without a stop loss, you are setting yourself up for failure. The efficiency of your strategy is directly tied to your risk management and emotional discipline. Only when a trader understands and implements this can they start seeing consistent profits and end their months in the green. Without these critical elements, even the best strategies will crumble under poor execution and emotional decision-making. Now let's get started.
So, let's dive right into our first interview with Charlie Burton. Honestly, there's no better way to kick off this video.
Most people are undercapitalized. They're trading with a few £100 or £1,000 in an account. If you're trying to make even 10% or 5% a month on that, it's boring because it's such a small amount of cash. And for a lot of people, they are undercapitalized.
It's amazing.
Percentage terms, it's brilliant, exactly. And that's why they have to set more realistic expectations. Too many traders out there have unrealistic expectations. They think they're going to turn 100% a month in. I literally had someone email me just a month ago who had £10,000 in an account and he wanted to be making £10,000 a month as an income on that. It's just crazy.
Charlie made some fantastic points that we at ComLucro think set the perfect foundation for this discussion. Like him, we receive tons of messages that go something like this. Hey ComLucro, it's Peter. I have $7 in my trading account. Can you teach me how to turn that $7 into a Lamborghini within 72 hours? Thanks so much, love, Peter. Now, don't get us wrong, we're not here to judge Peter. Plenty of people start their trading journey with the same mindset. Many new traders focus solely on the money, hoping to make fast profits. But if your only goal is quick cash, you're setting yourself up for failure. Charlie highlighted a crucial point. Successful trading is about thinking in terms of percentages, not dollar amounts. Sure, a 10% return on $7 is just 70 cents, but in percentage terms, that gain is substantial. When you start focusing on steady, consistent percentage gains, you'll be on a path to real, sustainable growth. It's this shift in perspective that truly sets successful traders apart, and Charlie's insight is a game changer. Our next interview is with Al Brooks, and I have to say, this one really stood out. Al offers a fresh and honest perspective on how to approach the market, especially as a beginner trader. His advice is a grounding reminder that while trading can be rewarding, it's also a skill that requires patience, discipline, and a strong mindset. For those just starting out, AL's insights provide an invaluable roadmap to developing realistic expectations and solid fundamentals.
Anyone starting trading is going to lose money for several years. You're looking for a career that pays a lot of money. Everyone trading wants to make a lot of money. You're competing against extremely smart people, and it's essentially a zero-sum game. So you're trying to take money from really, really smart people who are trying to take money from you. And when you start out, they're going to win. You're going to lose money. But if you have the discipline and you're careful and you learn how to be objective and you try not to be greedy, use stops, you use profit targets, I believe it's something that you can do. But I would start really small, and I would be very humble and work very hard on discipline and expect to lose for several years.
AL's perspective on trading as a competitive game truly drives home an important point. In order to make money, someone else has to lose it. So, as a beginner, can you realistically expect to outperform seasoned professionals right away? Probably not. Al emphasizes the importance of being humble, disciplined, and prepared to lose at first. He suggests starting small, using stops, setting profit targets, and above all, embracing the learning curve. That's why I'll also recommend starting with paper trading. Practicing with simulated funds allows you to build essential skills, learn the market's rhythms, and grow from your mistakes, all without the financial risk. This approach is a strong foundation for anyone new to trading, helping you cultivate the mindset needed for long-term success. All right, our next interview is with Larry Williams, a true expert when it comes to market timing. Larry's here to share insights on the best times to enter the market, and trust us, he knows his stuff. His approach highlights how timing isn't just important, it's essential for effective trading.
Stock prices on a daily basis or commodity prices are U-shaped. What do I mean by that? Well, here's an example. In the morning in Los Angeles, there's a lot of traffic on the freeways or in any major city. Then in the afternoon, not much traffic. At the end of the day, there's a lot of traffic again. That's exactly how the markets trade each and every day. There's a lot of volatility early in the morning after a market opens, no volatility, and then at the end of the day, we pick up volatility again. So the best breakout trades, the best trend trades will come early in the morning and after that afternoon session is done. That's the sweet spot of the market. I mean, after all, as a short-term trader, you need big movement. And the best time for the large movement to occur is right when the markets open and again, shortly before they close. It's U-shaped. Trade these parts of the U, not this part. You become a better day trader.
Larry's perspective on the daily rhythm of the market is straightforward yet powerful. He describes it as a U-shaped pattern. Each trading day starts with high volatility right after the market opens, slows down around midday, and then ramps up again as it nears closing time. In other words, the best trend trades often occur in the morning and late afternoon when volatility peaks, while the midday lull is usually better left alone. If you know anything about trading, you know that volatility is your friend. Trying to trade during those quiet periods can be challenging and often unproductive. Timing truly matters, and Larry's advice here offers a smart, strategic approach to day trading. Great insight, Larry. Our next interview is with Brett Steenbarger, who dives into one of the most common psychological mistakes traders make. Brett's insights reveal just how essential it is to approach trading with the right mindset.
I'd say two self-destructive behaviors come to mind immediately. The first I would call trading addiction. People can be addicted to trading just like they can be addicted to gambling, and for much of the same reason. Not everyone trades to make money. Some people are trading for thrills and excitement, and those people do get in their own way.
So trading is really a business. People need to think about it as a business. It's not like going to Vegas and sort of, betting the moon at the craps table.
That's a very good point, and much of the money that's made in trading is by being patient and waiting for your edge, waiting for your opportunity. If you have the need for thrills, you won't have that patience. You won't wait for your opportunity, and you get in your own way.
This interview drives home an essential truth: trading isn't gambling. Brett highlights two self-destructive behaviors that can derail a trader's success, with trading addiction being one of the most common. Like gambling, some people trade for the thrill rather than the goal of consistent profits, which often leads them to make impulsive decisions. Trading should be treated like a business. It's about patience and waiting for the right opportunities. If you're only seeking excitement, you're likely to miss those key setups. Brett's message here is invaluable. Successful trading is about aiming for steady, consistent progress, not quick thrills. Sure, it might not sound as exhilarating as high-risk bets, but adopting this disciplined approach can transform your trading game entirely. Our next speaker is Mark Douglas, who breaks down how to develop an edge in trading. His advice centers around building a reliable approach that removes fear and embraces probability-based thinking.
You're going to have to learn an edge. You're going to have to acquire a trading methodology that gives you an edge. I'm defining an edge as that there's a higher probability of one thing happening over another. That's what an edge is. And we're going to learn the nature of probabilities here in a moment. You're going to have a plan on how you utilize that edge, meaning what the risk is, position size, and profit objectives. Then you're going to have to be able to execute. You're going to have to get to the point where you can execute that edge without making errors. For you to be able to execute that edge without making errors, you're going to have to learn how to trade from a carefree state of mind, meaning you're going to have to aspire to the point where you can trade without fear. And to trade without fear, you're going to have to learn how to think in probabilities.
Mark shared some incredibly valuable insights here. So many people tend to overcomplicate trading, but at its core, success boils down to one thing: finding a pattern or setup with a higher probability of success, your edge. Once you identify that edge, the next step is creating a detailed, step-by-step plan to trade around it and committing to follow that plan without deviation. Mark emphasizes the importance of being able to execute this edge without errors, which requires a carefree state of mind. This mindset enables you to trade without fear, focusing solely on probabilities rather than outcomes. Once you've got this machine running smoothly, it's all about maintaining consistency, and with that, the profits will naturally follow. Next, we're diving into an interview with Steenbarger, where he discusses 2 specific behaviors that can interfere with your trading success. Brett's insights reveal how our personal tendencies can deeply impact our performance in the markets.
What are the situations that typically set you off? In trading, most of the problem behaviors are problems as the result of under control or over control. Under controlled behavior would be trading impulsively. I suddenly forget about my position limits and I'm trading much larger size than I should be. I'm suddenly not honoring my stops. I know I shouldn't be adding to a losing position, but I keep finding myself doing that. That's an under-controlled behavior. The opposite would be an over-controlled behavior. I'm so anxious I can't pull the trigger and make the trade. My system told me that I was supposed to go long in the morning, and I just sat there and watched the whole damn thing go up and up and up and up. That's an over-controlled behavior.
In this interview, Brett highlights what might be one of the most valuable truths in trading. The market is like a mirror, reflecting and amplifying your character. If you're impulsive, the market will magnify that. If you're overly cautious or a perfectionist, it will bring that to the forefront. Brett describes these tendencies as under-controlled and over-controlled behaviors, whether it's trading impulsively or being so anxious that you can't pull the trigger. You've probably seen it before, someone who does incredibly well on a demo account, making millions and feeling on top of the world. But the second they start trading with real money, everything changes. In my opinion, trading is 90% psychology, and unfortunately, many new traders overlook just how critical this aspect is to lasting success. Our next interview is with seasoned trader Linda Raschke, who underscores the vital role of preparation in trading. Linda's insights are a powerful reminder that a clear plan and well-defined edge can make all the difference in managing both your trades and your emotions.
First off, during the trading day, the number one rule you have to keep in mind is the less amount of decisions that you can make during the trading day. In other words, the more things that you have thought out before that day opens, the better off you are. You don't want to be having to make multiple decisions during the trading day. So very first off the bat, you must have your unit size predetermined. Are you trading 5 lots? Are you trading 10 lots? Are you trading 2 contracts? So forth. I firmly believe in deciding on your unit size and keeping an even bet size, because I don't know in advance which the good trades are and which the bad trades are, and invariably if I start doing a 2 lot where it's scariest, that'll be the winner, and if I do a 10 lot where it looks like it's a slam dunk, that's going to be the loser.
Linda's perspective centers around reducing the number of decisions made during the trading day itself. Her number one rule is simple yet crucial. The more you can prepare before the market opens, the better. For example, having your unit size predetermined, whether it's 2 contracts, 5 lots, or 10, helps maintain consistency and control. Linda also stresses the importance of keeping your bet size even, as there's no way to predict in advance which trades will turn out to be winners or losers. I really appreciate Linda's approach here, and I couldn't agree more. When trading live, the goal is to minimize real-time decision-making, because the more choices you make in the moment, the easier it is for emotions to take over. The solution is thorough preparation. By planning everything before you even enter the trade, you significantly increase your chances of success. Then, all that's left is to stick to the plan you've already crafted, simple, effective, and incredibly powerful. Our next interview features Al Brooks, who shares his thoughts on market news and whether traders should even follow it. AL's perspective challenges conventional thinking and offers a unique approach to understanding market information.
To me, news has no benefit to trading. It's entirely baked into the price charts. And if you see someone on the news, that means the producer picked that person to be on the news. And the producer picked that person among all the different choices. The market always has people with opposite opinions. That producer picked a person with one opinion. There's someone equally smart with the absolute opposite opinion. So if I'm watching the news, I'm only getting half the story, and it's going to influence my decision making in a bad way. So to me, the news, it's bad for a trader.
AL's take is clear. He sees no benefit in following the news for trading purposes. He believes that news is entirely baked into the price charts. By the time we hear a news story, it's likely already reflected in the market, and relying on it can actually hinder decision-making. Al points out that the news only gives you half the picture, often biased toward one opinion, while someone equally informed may hold the opposite view. I completely understand where Al is coming from here. By the time you're reading a news article, it's often already too late. Entering or exiting based on that news means you're likely reacting to a wave that's already passed. His view that charts alone tell an unbiased story is intriguing and may even be controversial, but it's certainly thought-provoking and worth considering. Next, we're going to listen to an interview with Bill Ackman. If you're unfamiliar with him, Ackman manages billions of dollars in trades, so he certainly knows what he's talking about. In this interview, he shares his perspective on the best way to learn about investing and understanding businesses.
The investing business you can learn by reading. Read everything Warren Buffett's ever written, watch every YouTube video he's ever appeared in. That's a great way to learn about investing. The way to really understand investing is to understand a business. And one of the most important skills you need as an investor is distinguishing between a great business, a good business, a fair business, and a bad business. And one way to get a sense of the quality of a business is go to work for one. So the recommendation I give to people graduating from business schools these days is this is the greatest time in history to work for a startup. Lots of incredibly interesting businesses being formed. And if you can be one of the early employees, you're going to learn a lot about how a business works, how to make payroll, how to market your product, how to design something. And those skills I think are invaluable. First of all, you might even find it really interesting. You might have joined the next Facebook, so that's one thing. Even if the business fails, you'll learn a ton from that. I think that's the best experience you can get, ultimately, to be a good fundamental investor.
Bill's advice is refreshingly practical. While reading and learning from experts like Warren Buffett is valuable, the real insight into investing comes from understanding how a business operates. He emphasizes the importance of being able to distinguish between great, good, fair, and poor businesses, a skill that's essential for any investor. According to Bill, one of the best ways to gain this knowledge is by working for a startup, especially in its early stages. This hands-on experience teaches you how to make payroll, market a product, and build something from the ground up. Even if the business fails, the lessons you gain are invaluable. It really makes sense. If you truly want to understand how investing works, the best approach is to start from the ground up. Getting involved in the inner workings of businesses allows you to see firsthand how they function. And don't shy away from struggling companies. They can teach you just as much, showing you what to look for when evaluating a business's health. Solid advice from Bill. The last interview is a special one I saved the best for last. It's with none other than the king himself, Warren Buffett. In this segment, Warren shares a powerful analogy that emphasizes the unique advantage investors have.
But Ted Williams wrote a book called The Science of Hitting. And in The Science of Hitting, he's got a diagram, shows him at the plate. And he's got the strike zone divided into 77 squares, each the size of a baseball. And he says, if I only swing at pitches in my sweet zone, which he shows there, and he has what his batting average would be, which is 400. If he had to swing at low outside pitches, but still in the strike zone, his average would be 230. He said the most important thing in hitting is waiting for the right pitch. Now, he was at a disadvantage because if the count was 0-2 or 1-2 or so on, even if that ball was down where he was only going to bat 230, he had to swing at it. In investing, there's no called strikes. People can throw Microsoft at me and, you name it, any stock, General Motors, and I don't have to swing. Nobody's going to call me out on called strikes. I only get a strike called if I swing at a pitch and miss. So I can wait there and look at thousands of companies day after day, and only when I see something I understand and when I like the price at which it's selling, then if I swing, if I hit it, fine. If I miss it, it's a strike. But it's an enormously advantageous game, and it's a terrible mistake to think you have to have an opinion on everything.
This interview might just be the most valuable one of all. Warren explains that, unlike a baseball player who has to swing at pitches within the strike zone, investors have the freedom to wait for the perfect pitch. In other words, you don't need to take every opportunity that comes your way. You can hold out until you find one that truly meets all your standards. However, many traders don't use this advantage, choosing instead to swing at every pitch, even those with lower potential. Warren's advice here is both simple and profound. Patience is one of the greatest edges you can have in trading, and fully embracing it can set you apart in the long run. In conclusion, each of these interviews has provided a unique perspective on what it takes to succeed in trading. From understanding the importance of discipline and patience to focusing on consistent percentage gains rather than quick profits, these professionals remind us that true mastery comes from a well-rounded approach. Trading isn't just about technical skills, it's about developing a resilient mindset, respecting the market, and recognizing the value of preparation. As we've seen, the journey to becoming a successful trader isn't a quick one. But with insights from top professionals like these, you're better equipped to make informed decisions and refine your strategies. Thank you for joining us in this lesson. We hope these insights enhance your trading strategies. See you in the next video.
I hope you enjoyed today's video. If you found the content useful or fun, please give it a like, as this helps the video reach more traders like you. Remember to subscribe to the channel and activate notifications to stay updated with the latest financial market information and trading tips. Sharing this video with your friends or on your social networks can make a big difference and helps our community become stronger. Your support allows us to continue bringing high-quality content, helping you make more informed decisions in the markets. Thank you for watching and good luck on achieving excellent results in your trades.